Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab? Great, thank you. How are we doing in YouTube? Thank you. All right, well, good morning, everyone. Welcome to the Traders Lab. I'm your host, Tom B. I stream live Monday through Friday, 11:30 to 1 p.m. Eastern Standard Time. And this stream's about integrating order flow tools from Bookmap with auction market theory using a volume profile. And it's done in the intraday developing time frame. And in addition, the Trader Lab is a community of traders coming together to build the business of trading, which requires an understanding of market mechanics. How does the market work? Why does it do what it does? And how might you at times get in alignment with it with structured trades? In the Trader Lab, I share 60 PDFs of structured trades that you can reverse engineer to build into a business plan. The business of trading is very much based on probabilities or statistics. It's not a predictive business. If we can accept that we have no control over the environment in the sense of the other participants, how they interact when they do their thing, whether it's a hedge fund, market maker, algo, high frequency trader, whatever it is, we have no control over the other participants. And it only takes one participant to disrupt our trade. So if we can accept we can't control their behavior, the only behavior we can control is our own. And assuming we can control our behavior, then we only want to interact with the other participants when we have a statistical edge, and that's called structured trading. And the idea of the business of trading is to create a vetted trade plan where you only interact where you have a statistical edge. It's the same process, of course, as how casinos operate. They only play games with an edge, and they don't control the outcome of the game because they can't control the cards coming out of the deck or the gamblers play. But they do control what they do and the games they choose to play. If they play their games that have an edge consistently in a random environment over time, assuming they don't change their behavior, which they don't, they have the opportunity to extract the dollars from the gamblers over a random large sample size. And that's really the business of trading. So then if we can approach it that way, then it really takes the burden off us to predict. It actually puts the burden on us to just follow a plan that we have vetted. So if you have confidence in a plan because you have statistics, it may allow you to extract the dollars from the other participants in the market. And of course, past performance is not indicative of future results. The outcome is always random. And it's really up to you to do the work. And that's what the Trader Lab is all about. Helping you develop ideas, processes, discipline, the proper mindset, and a business plan. If you want to be in the business of trading, these are things that might be helpful. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room, but this is based on structured trades that are available to all of you to download from the Bookmap Discord Trader Lab at no cost. And then you can not only follow along, but you can anticipate the structured trades that might develop subject to the context. Now, a big thing in trading is context. And what's context? It's the actual condition of the market. And the thing about the market is it changes from directional to rotational. And one of the things that's very difficult for retail traders is to not only recognize the changes in the behavior of the market or characteristics, but to actually identify the condition and align it with a trade plan. Because if we have a trending or directional market or a phase in the developing intraday market that is directional, that is one kind of plan. If the market changes its condition and changes from directional to rotational or vice versa, it requires a different plan. And unfortunately, like everything in trading, we only have the benefit of hindsight to know that a transition has taken place. We can anticipate conditions and we can be looking for them, but until it actually happens, it's only a suspect. And typically, when context changes, that's when we potentially will take losses because we're zigging and the market zags. It's just a reality of what this is. So remember, the key is to try to get in alignment. So let's go take a look. Let's take a look at some things here. Let me just look here. Okay. This is, and correct me if I'm wrong, guys, I don't have all the charts up. This is yesterday's volume. Naked volume point of control is the highest volume in yesterday's RTH. This is the ETH high. This is the ETH volume point of control, which is the highest volume in the ETH. Yesterday's low is here. Pretty exciting. And the overnight mid is over here. And here's another thing that's pretty interesting. This kind of sets up a kind of an interesting situation. Let me see if I can get this moved here. Sorry, guys. Try to scrunch this up. Here we go. And this is an open naked volume point of control, which is high volume the last time that we were down here in RTH. So that's like a retail price. The ETH low is here. Notice what we have. So low in the ETH, price check here. High volume is like shopping. It's like going to a store and you used to shop down here and the price was on sale. High volume was down here. It's a store. Shopping is trading. And what the point of a trade is, or an auction, is to figure out what's too high, what's too low, and what's fair. Well, last time we shopped down here, this was the highest volume in the RTH. It was a fair price. And then we traded above it. Now we come back to it. Is it fair? Well, if we left it and we come back and check it, and maybe, and this is the thing, the joy of trading, we don't know, this is too low, because this is today's ETH low, and we leave it, that sets up the possibility that we want to lean to the north side. And statistically, it supports the north side or up. So that's what I know. So that's starting out. Now let's go back again to a couple other pieces. We're inside yesterday's range on the RTH open. That's important. The overnight volume point of control, highest volume in the ETH right here. Hold on one second. Sorry. RTH open. So this is like creating our sandbox, Now I have to show you the other side. ETH high and yesterday's naked volume point of control. We are bracketed by what's too high and what's too low. We open inside a range, and that we start with an upward skew. So coming in, and this is what's important, coming in, I have a plan and I'm suspecting a couple of things. The market sold off yesterday, and potentially we can anticipate short covering in front of key reports, not to mention FOMC. Now, I don't think anybody expects anything out of FOMC, but the FOMC decision itself is not really the big deal. It's going to be the press conference. What's your inclination, Mr. Fed Chairman? Raise interest rates, lower interest rates, and more likely, we'll just wait and see. We'll send you a note later. So RTH open. So let's go take a look. So my first trade was a long, and I was feeling pretty good about it. Now, feeling pretty good means based on my plan, based on being above here, being what we checked in the ETH, I'm going for this and this. So this is my opening trade. And let me tell you why I would go for this. I'll give you we opened lower, higher inside of yesterday's range. So statistically, here's a couple statistics for you. Past performance not indicative of future results. There's about an 82-ish% probability we will check the overnight volume point of control, which is right below our open. There's a 72% probability we will check the ETH mid. The previous point of control, 67% probability we'll get there. The overnight high, a 69% probability. So everything is skewed pretty much this way, okay? So this starts out the long. So I want you to see the basis for why I was thinking longs starting out, you know? And then, of course, it changed, but that's besides the point. So you got to work with what you have, and then it's a matter of structured trades. This is a high probability target, right? Overnight volume point of control. I know you're paying attention. I can tell. I didn't hear anybody's head hit the desk or the keyboard. 82% probability. So if I open above it, I have an 82% probability of coming here, right there. So if I open, I get my sellers. What's this? Opening swing high. Everybody, I've been talking about the opening swing. I get my sellers. There they are. I check my level. This is a settlement. I see my buyer. I see my buyer. So let's watch. Stops are here. I break out. I go, oh, that's nice. I pull back here. This is a developing volume point of control. I'm going to label it. What it is, it's telling me where most of the volume was. And it follows the volume. So when I mention something like overnight volume point of control, it's fixed. In other words, that was the highest volume for the ETH session. This is the same thing, but it moves around as the volume moves because it's developing. So this yellow line is going to represent high volume. And what the volume profile really does is it really is only measuring price and volume, because volume and price tell us a lot. If you're in the store and there's a retail price and the participants perceive it that this might be too low, if we come back to it and it is still too low, then you can't buy S&Ps here. But you can come back to the store. Gee, I like buying them here. Really? I want to shop here, don't you? I don't want to pay this. I want to pay less. Let's see if we can buy them back here. They had them here. Ever go back to a store? We're sold out. We're sold out at this price. What happens here? Buyers. This is a long. Trader Lab. Notice where we come back. Right here. Still want to shop here. Can't get it. And why am I on longs? Statistics. So that's a trade plan. Now, what happens with the trade? You know, that's something else. So right here, too low, come back and check. So here's what you get. Buyers in here, sellers come down here. Buyers buy, sellers hit it again. Right here, I'm thinking, oh, this is over. Why? It's my nature. And the other part of it is, it has nothing to do with my trading. It has to do with Jekyll and Hyde. And Hyde is the lunatic. Hyde is always on my shoulder, whispering in my ear, oh, you better bail out. You know, all that, right? You ever heard that voice? Well, I've been hearing that voice for 44 years. What do? Try not to listen. understand that it is wiring to anticipate bad things in trading because of the fear of loss, of risk. It's wiring. So unless you gave yourself a lobotomy, you're still going to have emotional responses. But you have to make peace with them because they're trying to protect you. You can't stop it. You just have to make peace. So now market checks here. I see my buyers. I'm going, oh, this is great. Okay. Now I'm looking for this. In other words, these sellers to get squeezed. Notice this liquidity is here. I'm aware of it. I'm going, well, I have no reason at this point to think we're not going to take this out. Okay. So what I have here is the long here. I get risk neutral, which is my job, to pay for the stop and then hold and manage the trade. And for me, as long as I'm above here, I'm okay. Looking for the stops to get taken here. Stops are out here, okay? So I'm feeling pretty good. This is migrating up. Notice the behavior going higher so far. And let's look. Too low, too high. Check, too low. Too high, too low. Back here. Pull back, too low. This moves higher. This moves higher. It is saying can't buy it here, can't buy it here, can't buy it here. In other words, you can't buy it. We're out at this price. This is like you going to different stores and shopping. Oh, sorry, we don't have any left. Well, price is going higher and you're getting, I better get some. Buyers, pulls back here. Do we have any inventory here? No. Off we go. So everything is kind of going that way. Okay. Then this trade's over. So that was the long sequence. Now, in the Trader Lab, now let me see if you have any questions. Okay, so this is just a long, and it did some of its thing. It did not get the target, and then the trade is over. And now this is a structured trade. Now, trade management is a different topic. You have to determine for yourself how you manage these trades. Some traders are going to put this trade on, leave their stop here, and go to lunch. Other traders are going to actively manage. I actively manage. And like here, it was still okay. Now, I see the counter rotation, but I need it to stay here above the last place it was too low, right? Here. See how these sellers got trapped here? So I know here they're trapped. That's okay. I like that because I need sellers and sellers to become the buyers. That's what happens here. I get my sellers here. These guys are trapped here. We come back, no love for the sellers. We take these guys out. These guys are trapped. These guys are trapped. We come up. We get our buyers here. Feet up on the desk, having a wonderful time. It's all wonderful. Here, buyers. So sellers are getting hammered, except right here. Watch. Now, nobody knows. This is part of the joy. You don't know. So I see my buyers. I see my buyers. I see a seller here. I see my buyers. This is the last place my sellers got stuck. Here. So down here, buyers, here. So the stop can be in a few different places. For me, I'm aggressive. I'm not saying anybody should be. I am more short-term oriented. So when I see the sellers here who are trapped, and now I got the buyers above, and I take these guys, I come under here, now who's trapped? It has changed. These guys are trapped. So it's a change in behavior. Here I get my seller. Here, let's look. So we know these guys are trapped. We don't know until we know. The buyers try right here. Right here, right there is it. This is kind of like, all right, we're fighting back. This is like, can think of it like skirmishes, you know. These guys are going this way, and you got these guys stuck over here. When it changes and they get stuck, then the longs, and remember how we're trading this. The shorts, the market goes down to go up. The market goes up to go down. By the way, when I saw this here, I was looking at this, and I'm going, oh, we're going to get down move. Well, yet to go lower, we've got to come under this. So far, it's longs only, okay? This is where it changes, and there's no way to know. There's my seller, okay? This seller is stuck here. You could be out under here, or you could be out under here. Because if these guys got jammed, these sellers, then the buyers could come back and squeeze these guys out. What happens? What happens is these guys stay stuck. This buyer here is stuck. There's the last shot right there. Can't get back above any of this. Then you see the sellers come back in. These guys are trapped. This guy's trapped, and these guys are definitely trapped. So now what that does is it puts everybody on the long side under the bus. That's what it does. Now, I have nothing here until we come across. When we come across, then I'm going, okay, this is nice. Now we're in mean reversion. So now it's outside in trading. So I have to change my plan. And by the way, this is miserable. So you know, this is just miserable trading. And we have report 8:42, 8:45, I think it was. So that was the report. And then we have another one at 9 a.m. So we have reports. We got all kinds of stuff going on. So let me go a little further. And then I'll look and see if you have questions. So now, overnight mid, remember? And what is the statistic? I know you write these things down. I'm only kidding with you. I know you probably don't, but it's important. 72% probability we get there. And then possibly yesterday's low. Now, the thing is, let me show you this. When this happens, I have nothing to do here. I can't, you know, I don't trade into these reports. I just stay away from them because I can't control my risk well. There's so many trades that come along. Now I'm going to show you something else here. Let me just make sure I've got the right level. This is the lowest retail price right here. Variable high volume node. It was our quote support. In other words, this is too low. You can't, they won't sell it to you there. Too low. Remember the longs here. It's marked there. Now let's look and see what happens. Here, watch. Watch the line. Variable high volume node. Now, also, no precision in trading, guys. If you're looking for precision, not the business. It's slop. Because if the market moves on stops, it's not going to stop at a line. It's going to stop when it runs out of buyers. Who are the buyers in here? Well, maybe longs. Also buy stops. You see them? So now I have a level, and I'm looking to see if I get my buyers, what? Location. Watch. Location. This sets up a potential short if it's in your plan. For me, it isn't my plan. Why does it set up a short? Auction market theory. And again, once we cross over, I'm like, uh-oh, you know, but I don't have a way in until a retracement, which is here, structured trade. Then what am I going for? Overnight mid, yesterday's low, and down below. And let me show you the targets then. This is where I'm going, I think, or I hope. But that was the trade, okay? Then we have a 9 o'clock report. So I have to be out before this. So here we get VPOC migration. Let's label it. So right here, so we get our report, VPOC migration. This now is too high. I'm trading in fractal, so let's just follow it. Now, it got kind of nasty, you know, because the thing about mean reversion, it is outside in trading. What we don't know, and this is part of the joy of trading, is are we going to continue to the next target? My statistics favor the long side, but the behavior has changed. So one of the ways to deal with this is, how do you know? You have to have these things codified or made, and I use a narration process, sort of a conditional statements. And it kind of came out of when I built trading systems. Conditions. And a conditional statement would set you down a path of branch logic. So if this, then that. If not, then what? If this, let me get back here. Whoop. If this is too high, then that. If I come back and the VPOC is here, so I'm going for this, and what I'm getting is two-sided trade. It's called mean reversion, and I posted this in TLab. Now, what's really interesting about this is the last area that was too high. Our buyers are trapped here, and you can see the sellers took over. Buyers tried here. Sellers took over. Let's look. Buyers are trapped here. We come back and check them. Here's a micro high volume node right there, right there. That's high volume. If they will, and think of it like your mini mart down the street, you know, your little neighborhood store. Prices are higher, but you can buy your can of tuna there, but it's $1.75, and you can buy it for $1 in your regular store, supermarket. So out here, I have the interaction between the buyers and the sellers. There's less volume up here, but there's still an auction. Inside this volume are the buyers and the sellers. Who wins? The sellers win. These buyers are stuck. What happens? The buyers are fighting. Let's get them. No, not this time. Let's go here. Right here, look where we come. Variable high volume node. Micro high volume structure. There. Buyers fail. Sets up a short to here. It's called mean reversion. And then what you're looking for, this is called outside in trading. It's a specific trade plan. And that's very annoying, because the hard part, and I always mention this, of course, repeatedly in the TLab, is that mean reversion is difficult. And what's difficult is, where is the outside? Is it there? Is it here? Stop, right? Where is it? Is it here? It's very easy to take a bunch of stops in this thing. So what you need to be doing is really adhering to a trade plan. So what would a trade plan be like for mean reversion? Well, it wouldn't just be, gee, I see a short here. It's going to be, what range do I need? What trigger? What risk management? And what are my odds of getting back to where the stops are? Because mean reversion is really rotations. So the idea is the longs over here are going to get potentially run over. And then the shorts that come down are going to potentially get run over. Now, one side may throw the towel in, and you don't know. So it's when you're in this kind of trade, you're kind of really, the goal is just to get here and then see if you can fall out one of the other edges. So that's it. So for me, I was on the shorts after the first trade, you know, the longs, because they failed. So that was just me. And there's not a right way to do any of this. I wish there was, because for me, this is my least favorite condition because I end up getting like here. Get a scale, get nothing, get taken out. Come back out, look for a short against this liquidity, not get a scale, get taken out, that kind of thing. Put the trade back on again, get my target, no problem, and then hold that kind of stuff. So there's a lot of trades. Come back out here, looking for it to go, here, I'll show you. Where to? Here. What does it do? Comes out. One ticks the initial balance. Initial balance, by the way, is the first hour's low. We one ticket. Sounds like a ticket. Where was it? I think it was here, right? I think it's here. I can't remember. And then we mean revert. This is part of the problem of mean reversion. You can come out, just take stops and come back in, come back and around. So that's what makes this hard. And look where we come. Variable high volume nodes. This is the most recent one. So it's that one, not this one. We can take this one off and we come back outside. So this is either get out of Dodge or a long back to VPOC, back out here. Can't get above here. It's a short back towards here and maybe down here. That's what this is. This is all it is, and it is not fun. This is just hard. This is hard for me because I take a lot of trades in it. And I find I prefer not to take a lot of trades. I just want to get rotations. I'm a rotational trader, so I trade whatever, but the thing about a trade plan for mean reversion is the discipline to be patient and to cut your losses quickly. It's separate trade plan. In TraderLab, and let me open this up for you. Hold on. Get out of there. I'm going to show you this in detail. If you have questions, please post them. I'll take a look in a second. I can't see your questions. You'll see the buyers here. You see the sellers take over. Right, there's a little more. Variable high volume node. Alignment is what this is about. So I need alignment. What created that high volume up there was an auction. It's a retail price in a shopping experience. Fractal. As I go into a shorter time frame, let me show it to you. I just want you to see how you put fractals together, pieces. In other words, Russian dolls, big Russian doll, little Russian doll. These are the smaller Russian dolls. In a fractal, you think time frames. I don't really think in the clock. Here's your buyers. Here's your volume. When you look over here, what you're seeing is an auction. I'm not paying that. Yeah, but it's on sale. Yeah, but it's too high. Nah, I'm not going to pay that. Here's our volume. Here's our delta right here. Here's our market pulse right here, suggesting excess. Here's our liquidity. And we only got 7 buy stops. This is the stop and iceberg detector. Why is this useful? Well, I see my buyers. Are they buyers or are they buy stops? Is there a difference between a stop and a buyer? Of course. These are passive buyers. They are not aggressors, but in the delta, they become market orders. So they're just sitting there with a stop. They get taken out. So they were not active there. And maybe they bailed out and it became a market order. But this is market by order data for Rivnik. It comes from the exchange and they have tags on them. That's how they know the difference between a stop, a limit order, market order, and the rest of it. So this is a limit. I'm sorry, a stop. So it's a buy stop. Delta, exhaustion, liquidity. Now what? Liquidity. Now what? Buyers. What's over here? Volume. What happens if I don't if I can't get above this. Trapped. There's my seller. This is too high. Watch. Where do I come back? Have you seen this before? Buyers, sellers, short. This, if you can't activate here, you have this for a short, stop here. You have this for a short, stop there or there. Safer there until it gets going. Then you can, move it down to here and then trail. And that's your short to here, mean reversion. Anyway, I'm trying to share, these things with you here. Now this, clueless. This is called the IB failure. And I haven't seen any of this, so this sets up a long, back to here. And what else we got going on? Back to here, short. You see, two-sided trade. That's all we got. And this is pre-FOMC. It's not that unusual that the market is just sort of hanging out, and it's kind of like abusing everybody. So how do you trade this? Let's go back. It's called mean reversion. It's outside in, outside in, outside in, outside in, outside in, rotational trading. And what's our targets? Downside here, right? Upside here. We are right in the middle, as they say, no man's land. And I'm going to have to use the thing no person's land. So that's a target, and we are sloshing between them. And there's a reasonable chance we're going to, once FOMC comes, all bets are off. It's like a new day. But that we're going to potentially check one of these, maybe, before FOMC. Or just do this. Any questions? And then thanks for your patience. How are we doing in YouTube? You guys conscious? Hope you're getting something out of this. This is auction market theory using the volume profile and a structured trade plan. This is what we do in the Trader Lab. It's about trying to stay in alignment. That's all there is to trading. Alignment, recognition of a condition, having a plan for it, having vetted the plan so you know there's an edge, and defining when it changes. So right now, this is outside in trading for me. So all this is this. So can you trade this? And here's the thing with this kind of trading that is difficult, among other things, is patience and outside. So you have to wait to find and extract an outside edge. So a short from here, you're only going to here, and then you're trying to get outside. Then it's potentially back inside or not. I'm a little bit more leaning to the south side. So I may, or I'm just talking about me now, I may just stay with shorts and not take long. I may just take the longs as cover the short. This is all a matter of bias. My bias is this, but it can do, the statistics favor this. How do you resolve that? How about you can't? Only way you resolve it is you either pick a side and you just trade one side, or you accept it's going to do this and you trade both sides. Because there's no way to know. And so you understand balance is two-sided trade. So it's this stuff. And what happens in balance is there's two sides, right? And it's a consolidation is really all this is. On each side of the consolidation, you got traders placing their bets. Buy stops are here. Sell stops are under here. Who's going to win? How about, don't know. So my job is not to predict the winner. My job is to follow a plan for the condition, which is this. That's it. That's what we got for today. And this is another day in the business. And if you're in the business, then you know this is the trade. outside in, outside in. And one of these sides is going to throw the towel in, right? So, and we don't know which one. And the reason we don't, and you never know anyway, and don't forget FOMC, this is a huge fundamental event. And I think, I mean, you're going to get volatility, of course, when they make the announcement at 1 p. Central Standard Time. But the big part of this is not the Fed funds rate. It is going to be the press conference where the Fed talks about conditions. And what about inflation? Inflation is a problem. It's persistent. All the economic numbers coming out are suggesting things are not cooling off. So it's possible that we may or may not get further Fed fund rate reductions going forward. We have the election coming up. The Fed does not want to look, the Fed is, quote, independent, and it does not respond to political pressure. At least that's the idea. And there's a reasonable shot they're not going to want to be looking like they're favoring either presidential candidate or political party. So they will not change rates approaching the election. So if anything's going to happen with rate, you have to ask yourself, are they going to lower the rates in the next couple of months? Nobody knows the answer. But I would suspect with inflation being a problem and the fact that the Fed is still feeding liquidity, that things are going to stay buoyant. And then that the real fun might begin in the fall of this year or even before the election. We'll see. Neither here nor there. And that has no basis in what we do as day traders. So TLab is all about this. And this is not what we like. Yesterday was a whole different experience if you were following the stream. Today, different market, different behavior. Any questions so far, guys? Let me check. So what you have here, so it's just reversion trading, outside in, outside in. This is what we have. And we have shorts in the market. So it's really a neutral situation here until we break out. So you can be, subject to how you trade, you could be taking your longs out here, scaling here, and then looking potentially the behavior up in here to squeeze these sellers out because there's buy stops here and there's buy stops above here. This is what we know. We just don't know if we're just going to come out here and rotate back or if now we're going to punch through these sellers. So that's all you got, in my opinion. And that's not a terrible thing to have because if you understand this condition, you are selling, buying, selling, buying, and then you got to see. It might be a short up in here, or that's all you know. That's all I know. And the fun part is, look where we are between here and here. And one of these is going to get tagged. This one was checked in ETH. What I found with these is there's just the fact that this was tested in ETH doesn't mean we won't test it again. There's just no way to know. And this one is open from yesterday. I think it was about a 70% probability. Hold on, 67-ish % probability we get here. There's also, and now we did take out the first hour low. There's about a 29% probability we take this out. But 70% probability we get there. How do you sort this out? Conflict, huh? Well, what did we do yesterday? Sold off. What's the condition of the market? Short. What does the market do? The market, in all fractals and time frames, the market goes up to go down. The market goes down to go up. The market goes up to go down. The market goes down to go up. The market goes up to go down. That's what it does. Now, it does it in all fractals in all time frames. So yesterday, what did the market do? The market went down. What does that mean potentially for today? Maybe the market will go up. Now, it doesn't mean it will do it. Might not do it till after FOMC, or we might do the Acapulco cliff dive. Not my problem. And not my job, because my job is to trade the current context. That's why short, long, long. And then for me, I look at where the opposite side came in. And then I'm looking, this is targeting here. If this is too, let's come back. Let's look. Too high up here, remember? Too high coming back here, remember? Too high here, remember? Buyers were here. Take out the stops, exhaustion, liquidity, icebergs. Buyers are here, back to here. Remember, we're always trying to get back to the mean. This is the volume. So it's, I'm not paying that. Yeah, but it's on sale. Retail. So we don't want to shop here. We want, if we're a buyer, we want to buy it on sale, outside, back in. And if we're a seller, we want to sell it as high as we can, and then it would come back potentially here until we break out. Does this make sense, mean reversion? Are you guys tracking with me? Oh, Jim, you got funded. Congratulations. Jim's in the Trader Lab and is now a funded trader. If you guys are interested in that, there's quite a few participants in Trader Lab who have developed the skills and trade plans and are now funded. And if you're not familiar with funded trading, it's a way for retail traders to participate in the market with minimal risk. Actually, you don't participate in the market. You actually participate in a, basically, you're not trading funds, somebody else's money. You're not doing that. Basically, what you're doing is you're providing signals, and the prop trading account basically, and there's all kinds of parameters to it and requirements, but if you can pass with their qualification, then and maintain certain parameters over time, you can extract dollars based on you meeting certain parameters. And it's a way for retail traders to not only develop, but to kind of get the toe in the market. And when I started trading in 1980, of course, none of this existed, right? So it's a great venue, I think. And while it's not a recommendation that anybody participate in funded accounts, past performance, not indicative of future results, I do think it's something worth investigating. And a fair amount of traders in Trader Lab have gone on to funded accounts and have used that as a part of their process of developing their skills and their business. Too high. So if you got long here, you're going here, and this trade could be done right here, right here. So if you're trading mean reversion, you're just trading outside to outside. That's all the trade is. If it blows out the top, then that's what it does. It doesn't matter. For me, if I'm trading this, then that's what I trade until it changes. Just like in the morning, I was trading long until it changed. All this, this was, yay, all right. No, not so much. And then we changed. See how we started out directional? It was over here. I believe it was here. Directional trade. Back to here, too high, outside. Back to here, too high. So we had that too high. Now we're against this volume, too high, seller. Now we're against this volume, which was against that volume, which is against that volume. See the sequence. What is it doing? Moving lower. Back to here. So too high, test, I'm out of here. Too high, test, I'm out of here. Volume, test, I'm not paying that. I'm out of here. Volume, test, right there. I'm out of here. You see it? This is rotational trading. This is a specific trade plan. And I will tell you, I have to bolt down and keep my shoes on because I'd like to throw it at the monitor. It's very difficult and requires patience. So how do you get patience? Well, it's not a loaded question. It's waiting for what do we know? We know this was too high. If I know it's too high, do I have the discipline not to sell this, which I could, but I got to clear this to wait for that because that's my location. If I get my selling and I come outside, do I have the patience to wait for my location? Not doing anything here. I'm in the middle. I can't. Mean reversion is outside in. Mean reversion is outside in to the other outside. Outside in to the other outside. Outside in to the other outside. Vice versa. This is mean reversion. Questions on mean reversion? And yes, we joke in the Trader Lab, it is mean. Debbie, that's a great question, Debbie. Where's the outside, right? The problem, well, let's define out. Debbie's asking, how do you know when? Well, first of all, we have to define the when with the where. Where? I always think of this kind of like real estate. You guys have heard the term location, location, location. Well, the key thing in mean reversion is location. It's not like this. This is a short, but there's no location because you got to have range. But what do I know? See, we have to look at what we know. We know the volume was here and that the volume moved down. If we look at this like shopping, and that's what this represents, where the high volume is, and it's no longer the high volume. Now the participants have said, and this is language, this is too high at the moment. My plan, the best place for me to interact is here. And now I have a new auction in the fractal. And in this auction, the buyers got stuck, the volume is here, and I leave it. And I take out the longs in this leg. So I know there's stops there. Hold on one second, guys. Okay, sorry. So that's what I know. So to answer your question, I have locations. So there, and then back here to take this leg out. So I'm only trading the rotations. So, and you don't have to, here's the thing about this. You can just pick one side and not be trying to run both sides, or, you know, whatever you do. Like, so for me, I've been on, it's been a short side for me, you know, after the longs fail. Because for me, once something, it's if this, then that. If the market, if we're going north, then yeah, then that. If not, then what? Then south. Then south. And then once we start crossing over, then I'm just in a different trade plan. I'm in the sell, the buy, the sell, the buy, you know. And then one side's going to give way. And because of my location, Debbie, I am just sort of like going tilt. You know, I'm going, I don't know. And by the way, I can accept I don't know because the only thing I know is that I don't know. So the burden of knowing does not exist in trading. We can put the burden on ourselves, but we can never be right on predicting. So for me, if I go, once I recognize the condition, I'm in the outside in mode. So that's why this is a short. This could be a long back here, and that's the mean. So I'm always coming outside in and then outside in. You'll notice the range is beginning to contract. But look at the symmetry. Let's look at this. Here's my volume. Notice where I just came back. But my range is compressing. So I can't trade this now. Because where am I going? There's the mean. So now, basically, I'm either long from here, scaled here, and I'm either going to hold the long, or if I can't get above the volume, which is where the buyers are trapped, and now the sellers are here. You see, you have to kind of be always looking who's doing what here. Sellers are here. They are in control. Buyers are pushing right here. If we clear, now these guys go under the bus, and potentially we have to see what happens back here. That's it. So outside though. So if you're in a short, you would be out of it because of this. You might be long to here, and then you'd be looking back at this and this right here. And you could be out of it. It doesn't matter. And if it goes all the way up here and takes out the top, that's just not our trade. At least not my trade. I'm not saying it wouldn't be yours. But if I can't clear this, then these guys are going to be in pain. That's kind of what goes on. Something just went a little weird on me here. Hold on a second. Something that's not looking quite right here for me. Let me just make sure I've got my settings right here. I kind of don't want to see all the dots. I'd want to see just where that volume kind of bulges out, because this is more important to me. I can see there's nothing going on here. This is what I want to see. This buying up here, this buying over here. This buyer got trapped. This buyer got trapped. So if I don't get above these buyers, and remember, I can't sell it here because of the range. But this, if this was somewhere out here and it was in alignment, then it would be a short. But because of my location here, I can't do anything. But we can watch the behavior. This is kind of important. You can see what it's doing. These buyers here got trapped. Currently, this can change on a dime. There's no buyers above here or above here. And I mean reverted. This is mean reversion, not qualified. The behavior is what you want to be thinking about, in my opinion. What's the behavior? It's the reversion to the mean. Now, again, we have targets on both sides of us. So it could do anything. And this is our last area where it was too high. So we'll see what it does. So for me, I have no trades in here, but I have behavior that I should observe. Is that making sense, guys? And Debbie, does that make some sense? Yeah, Stephen, did I answer the question about the delta for you? The VHVNs, Willard, what I do with them is I mark them, but as they get traded over, I take them off. Right now, this one is the outside edge. I'm interested in that one because of the behavior. What's happened, and there's one down here, but it's been traded through, so I just don't think too much about it anymore. You see? So it just doesn't, it's off my screen. Because what does a variable high volume node represent? It represents an auction that was rejected. So as the auction is moving around, I'll keep track of it. But if I come under it and then come back above it, it doesn't exist anymore, because this is the most important one. And right now the volume is here, so that's why this is this. So I hope that answers your question. This one is still important because that's what capped it. We take this out, then I can turn the ship around and consider a long. Through here, through here, through here. If I can't get back above here, then I'm going to continue with this kind of thing. So until it changes, and I'm watching, like a hawk here, what happens? Let's look here. I'm going to show you one other little thing. And these are all part of the tools in Bookmap, and I find them really, really, really helpful. Hold on a second, guys. So I've still got a lot of noise here. I got to see something. Hold on. I have to, one of my settings seems to be a little strange. 35. So as long right here, notice the buyers here got absorbed. Seller was right there, absorbed. I pay attention to absorption. Somebody was selling here. So sellers, buyers, right here, a seller absorbed the buying. Are these guys trapped? Look at the liquidity. Now I'm going down a little bit in, minutia here for you. Liquidity, see it start dropping down. I see my seller here, just giving you a little sense of it. Notice the liquidity. See the behavior? That's a short. Now let's come back to the other side. Let's try to look at the long side. Now there's no way to know. I want you to know, if I knew what, any of this, it would be really pretty nice, right? So we come out the first hour's low. This is the initial balance. And right here we have our sellers. There's a buyer. Here's our sellers down here. Now here's our sellers over here. Looking good, Lewis. Buyers are stuck here. Let's just follow it. Sellers. So the sellers are here, right? Seller here, buyer here, nothing. Seller here, looking good, Lewis. I got nothing. This comes in. Buying iceberg, I get a buyer here, I get a buyer here, I get a buyer here. The trade would be over. I'm now back inside. This sets up a long to here. And that's mean reversion. I mean, that's all you got going on in here. It's enough to make you, your head spin. And where do we go? Here. Here. So that's all this is, guys. Any further questions on this? And I hope I answered your questions. By the way, here, I forgot. Market pulse. Let's look at, and where's the market pulse? Sell here, but not in alignment. Sell here. Liquidity, alignment. Now, if it's not your trade, it's not your trade. Again, for me, this is getting compressed. This takes a lot of skill because I cannot, I'm just not there yet. I see this, I'm looking for buyers above it. And if not, and this guy gets trapped, here's the delta. But how do I know? I see my seller. If I stay under here, I have a short, but there's my target. That presents a problem. I cannot take these now. See? But what's important, I think, is that you understand the context. And I have a primer webinar that you're all welcome to watch. It's in the Bookmap Discord TLab chat. There's a link in the bottom of YouTube. In fact, maybe I can post that in here for you guys. Let me see if I can find this one. I'm going to post this for you guys. It's a overview of the process, and it's going to be in the chat in YouTube if you haven't watched it. It's only an hour long, and it gives you an overview of this process. It's got over 28,000 views, which I guess makes it kind of popular. Hasn't been out there all that long. And I'm not a vendor, you know, there's none of that. There's no cost for any of this. It's a community. And the idea is, how does this work? Why are we doing this? Why would you even think about it? Well, most of us in the retail space, and I'm now a retail trader. For many years, I was not. But in the retail space, we kind of start this business with the idea of a software package, indicators, and timeframes, and get in the mix, right? It's kind of like I'm making a stew here. Let me get the right one. And then we go on a quest. And the quest is to fix it, to make it better. And gamblers in the casinos walk out with cash. So we walk out with cash too, even if we don't have a process with a statistical edge. Gamblers win. That's why they come back to the table. And what we tend to do is we tend to get the screwdriver out and say, well, maybe a little different moving average or a different MACD setting, or change the standard deviation on our VWAP or Bollinger Band or Keltner. Pick one, right? They're all the red. Oh, I'm going to use Fibonacci because that predicts where it's going to go. And I'm going to suggest maybe not. So, or Elliott wave. Let's count those waves. I won't even go into the years I've spent doing the same things we all have done, and that's trying to find the right fix, the right fit. And I did it with systems. So I took it from what was obvious in indicator world. When I started, indicators were just becoming available. We had no internet. We didn't even have computers. That was pretty interesting. No domes, nada, zippo. You know, so no candlesticks, right? So anyway, neither here nor there. But the point is, when I started trading, I thought it was about predicting. Oh, where's it going to go? Where's it going to high of the day? You know, all that. Well, figured out over time that was random. And because I'd have it right sometimes, I kept wanting to make it better, so I'd have it right more often. I coined a phrase for it, and it's based on my own experience. I call it Trader Groundhog Day. This is where you keep waking up in the same place in spite of working hard. And you can waste a lot of time, in my opinion, years, trying to fix what might be a defective process. The challenge we face is that a monkey can throw a dart. In fact, they did the monkeys in 1987 actually beat the analysts in 87 for picking stocks. So monkeys can actually make money trading. So, but not over long samples, right? But that's because it proves the randomness of this. So if we're in a random environment like the casinos are, then we need to change our approach, in my opinion. That's what TraderLab is. It's just about understanding the business you're in, understanding this is market pulse. It sets up a short, it sets up an outside edge, and it's not qualified. I know this makes you excited. I'm not saying you can't trade this. I'm saying is you have to measure it and know, do you have a statistical edge to come here based on where you execute, which is not here. Wouldn't it be nice? I can't execute until I see these guys trapped, which would put me in here. How do I get short in here for here? It's like using a shoehorn. I can, but I need to know statistically, does this pay for me? Can I get risk neutral if my stop goes here and I'm looking to trade, and I have to go here to get a scale, and then I'm looking to come back outside because that's all I got is rotation. Let's see. Where are we? Oh, there we are. And where was the last place it was too low, this volume here? So I would be only trading this to this to this. That's about it. Is that worth it? I don't know. I don't think so. But that's up to you. Is this logical? Can you kind of see what we're doing here? The range is compressing. Our outside edges are out here and out here. So this is kind of this is it. So if I'm short, I'm trading to here and I'm trading out to here where these guys got stuck. See, they got stuck here. So this is kind of the outside area. And then you got to manage the trade. So the buyers took a shot here. Sellers are stuck here and here. Now, by stuck, it doesn't mean these guys are stuck because they're in this lane, you see. But it tells us where these sellers got absorbed. That's what the message is. These buyers got absorbed. That's the message. So it's this, and then they got absorbed. Stops are under here, right? What's under here? This leg. What do I trade into? Stops. Where's the sellers trapped? Absorption was here. So I can come here, and then I can come down and check here, or not. So you're basically trading, where were the stops? Here. What do we do? Stops. Where are the stops in this leg? Here. What do we do? Stops. You see how you might trade this? Is that worth your time and trouble and brain damage? I don't know. But this is how you trade it. Is everybody tracking? This is mean reversion. Stressing the term mean. The difference between global and global plus. Well, I can't explain that, but I'll give you a link because there's a lot more to it and a lot of options. In fact, I don't know if Steve is in here. Let me try to. I'm going to put Bookmap's URL in here. And you just go over there and they show you all the options. There's a lot of options. It's www in front of it. And check it out. There's a lot of information. Watch the videos on the product, all the different add-ons, iceberg detector. This is the heat map. I mean, back in the day, we'd have to look over here at the limit order book. And with the algos now, it's a whole different thing. You're trying to compete against the computer. I can't look at this. I'll lose my mind. So the heat map is showing me the limit order book, so I'm not looking over to the right. So this is your short if you're inclined. Like I say, it's up to your trade plan. And this is our area right here. Because the thing with this is we can come outside and then just come right back here. You don't know. So anyway, I'm just letting you know that's the trade. This is the area. The absorption was here. The absorption was here. See the buyer? So we're going to watch this. But this is the mean. So you have to just be very aggressive. So you have questions on mean reversion, this is a good time. And by the way, why mean reversion? Why do we care about this? Because most of the time, the market's in a rotational condition. It's consolidating. And the way the market tends to work is, in all fractals and time frames, it rotates. It rotates. And then when it leaves one of these locations, it trends. In other words, it gets directional. Then it stops and it rotates. That's what this is. So we need, in the Trader Lab, we have trade plans for the directional moves and the rotational. And the rotation will lead to directional. And today's one of those days where, as Dirty Harry used to say, or does say, or did say, do you feel lucky? Well, do you? Because that's what this is going to come out to, luck. Luck is picking the right side. In the meantime, this is what you do. Unless we fall out here again, then changes things. Questions on mean reversion, guys. And thanks for your patience. Mean reversions requires patience. Exhaustion. Well, I think, how do you determine, well, there's a few ways to think about exhaustion. There is literal exhaustion where you run out of buyers, where they just, that's it. There's no more buyers. Buy stops can create exhaustion because those aren't necessarily real buyers. You know what I mean? They're buy stops, so they're not initiating, they're being taken out. Different kind of buyer. For me, exhaustion is when I look at this, the buyers here. Now, it stops, but I also know that if I don't get buyers above here, if I have breakout buyers in here, which maybe, I don't know, they're trapped and buy stops. So these buyers here are maybe just covering their short, and the buyers up in here are weak buyers, breakout traders who are, to me, breakout trading. I don't trade breakouts. I mean, that's what retail traders do. I want to do the opposite. So if I think I might have a breakout and I see exhaustion, I'm going to fade it because the breakout traders are going to have their stops here, here, here. So I'm going to trap these guys to trade to this. That's how I look at this. So that's exhaustion for me. And I don't know it's exhausted here until I see this behavior. Where's my buyers? I now have a seller. These guys are potentially stuck. And here's what's showing it to me, the delta. And here's another little piece, juicy little piece, market pulse. Sets up a nice short, technical short. There. That's a short. If you're used, and this is an indicator. I don't use them in my trading, but if you understand mean reversion, here's a hint for you guys. Mean reversion is rotational trading. If you're in a non-directional rotational trade, a tool like the market pulse might be something you want to integrate into your plan. And I always have to say, you have to vet this for yourself. If you're in rotation, then, and this kind of process might work. And nothing works all the time. And it's not mechanical, by the way. By the way, let's look at this. If I'm outside, this sets up a potential short. If I come outside, this sets up a potential short. I'm outside. Now this sets up a long. Am I outside in mean reversion? No. What is it? Nothing. That's how you have to vet. What is this? A short. Where am I? Outside. What happens up here? Where am I? Outside. Sets up a short. This says long. Am I outside? No. Are you guys tracking? So this, nothing to do. I mean, I can't do anything with this. It's not. What is number one? Location, location, and context. So the context is rotational, outside only. You see? How do I use this tool? Outside only. Where's outside? Nothing. I'm already in the trade, right? Outside only. What does this say? Down. Where am I going? I don't know. Outside only. So I'm using it in alignment with the context, which is rotational, and I'm only using it at qualified location. Can you see how a tool or an indicator might be used? Now, I don't use indicators in my trading. And the reason in the Trader Lab, let's say, de-emphasize indicators is most retail traders put the indicator first and have no idea about the condition. In the Trader Lab, it's about understanding, number one, the condition of the market, then the plan and the tools that align with the condition. If you're in a directional market, this will get you very run over because an indicator is only one piece. It does not take a global view of condition of the market, which is rotational. Rotational trading is its own separate plan. And if you're interested in the business of trading, then you got to have a plan. What business operates without a plan? Now, if you're into video game or gambling, then this you could just click, 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 whatever whatever you do. And that's all good because you choose that. But if you're interested in the business of trading, creating career, and learning what it takes to be in the business, it really is not what you think it is. I think, and most traders in TraderLab, I think, will tell you that when they come to TraderLab, they get a different viewpoint. But here's the best part. I say it's the best part. You determine where your comfort level is. In other words, are you comfortable in this range and time frame? Some traders are going to put a trade on out here and not touch it. Other traders are going to be short, long, short, short out here and holding. This is my kind of trade. This cut. Why? Mean reversion. So I'm only and I have a short bias, which means nothing. That's all. And I truly means nothing, because a short bias only means that I'm looking for the longs to fail. And a lot of that has to do with what happened yesterday. But I know it can do either. So I'm just, what do? Outside in to the outside. Where's my buyers? I don't know. This is where there might be stops here. So, and I'm not trying to hit the home run here. This is not home run hitting. This is rotational trading. Final questions, guys. Got 8 minutes. And while we're here, I'm going to just show you something briefly. This is what these structured trades look like. And what you see me discussing here in the stream is what's represented right here. And I'm not a vendor. There's no cost for these. And it's circles, arrows, here, here's, and some of these are actual trades. Others are just screenshots, explanations, short, longs, shorts, rotational trading, break, test, short, back here, target, more targets. How does this all work? And it's not that you do this, take this and replicate what I do. That isn't the goal of the TraderLab. You could probably develop better processes. I'm not saying there isn't one way to do this. And most traders just, if you go to like a chat or you sit in somebody's room or whatever it is, we all think it's just, quote, do what I do and you'll be successful. Absolutely not. You have to do what you do to be successful. And that means statistics. Notice where we came. Remember what I was saying to you. Where was the last location? Wasn't it here? Let's go back and look. You see? Here. So you could be, short to there, out to here. Trade's over. And then potentially long to here. That's the trade. Hope you're getting something out of this. If you're in YouTube, please give a thumb up. Also, there's a link in the bottom of YouTube. You can access the Bookmap Discord TraderLab. And there's those 60 PDFs. You can download it, no cost. A library of webinars. Start with the primer webinar. It'll give you a high-level overview of process. And then you have to reverse engineer it. The TraderLab's a community of like-minded traders. Our senior trader has over 54 years, I believe. I think he stopped counting. His name is Patrick. I've been trading 44 years. Was in the business for a long time. Money manager and the rest of it. Had my own business. A lot more to that story, but it's a long time ago. And worked with, was at kind of the forefront of a lot of things that got developed. I worked with George Lane. He created stochastics. I shared an office with him in early 1980s. I also worked with Ralph and Bill Cruz, and those are the guys who created ultimately what became TradeStation. And this was prior to TradeStation. So I have a background in system design, development, and a lot of other things. I just saw the question in YouTube. I make it look easy. It's not easy. But by the way, anybody can learn to trade if they put the time in. Being able to trade is the part that's not easy. The emotional management and doing the work to extract the statistics. Many of us are in such a hurry to trade. We want whatever it is, the stimulation, the excitement, quote, of course, the profit if it's there, but we're not willing to do the work. We go to chats, human nature, and we're looking for somebody to hand us the answer. The answer lies within you. It's not me. I can share what I've done. I can share what might work for you. But in the end, it is statistics. In the end, it's just like gaming. That is the business you're in. If you can discipline yourself to wait for structured trade. See, the whole idea with trading is not doing this because you think, oh, it's going to break from here and wherever. It comes back here. Are you going to sell it here? I can't. I can buy it here. Or if I'm leaning to the south side just because it sense of smell and nothing else, that I'm just shorts covering. And one of these times it's going to take out one of these. It doesn't matter. So for me, I'm leaning short. I can also just trade either side. That's trade plan. Now, is it easy? No. Because every time we walk into the market, it is random and we're going to be scared. We're scared because we're wired to avoid the saber-toothed tiger and not to run into the burning building. In other words, risk. That's our wiring. It works well for survival of the species. But for trading, we're pushing against this primal wiring. So is it easy? No. This is the most difficult thing you'll ever do, but not for the reasons you think. It's because of the mental state and the problems we face with uncertainty. And the only thing we have in this business is we are in a random environment and it's 100% uncertain. So that's the only thing for sure. It's uncertain. So if we know it's uncertain, when you take a trade, you're fearful. And what most retail traders want is confirmation. Where's your confirmation? Where you should be getting scale? Should you be getting long here? Or are you going to wait for this and buy it here? You can't. In this range. I mean, this is the range is the other issue here. So, so you might be sitting here all day with nothing to do. And you know what? That's a business decision based on metrics and statistics. You would know if you're in TraderLab and you do the work that this trade might qualify. You would know if this long might qualify and you're trying to get back here. And if you don't get back here, you're going to get stopped out. It's that simple. And for me, I'm only taking shorts, remember? Not a recommendation because this could come out the top. See? Doesn't matter, does it? If it matters, then that's an emotional problem. What matters is trading the plan with a statistical edge and accepting the random outcome of each individual interaction with the gamblers. That's how Las Vegas has built those casinos. They accept that gamblers walk out with winnings. That's why they keep coming back to the table. Can you accept that you, like every other business, have a cost of production and you have overhead? Our overhead is commission costs, software, and losses. Can you accept that? You need to if you're going to be in the business of trading. Please give a thumb up in the bottom of YouTube. It helps the stream. Also, use the link down below. There's no cost to access the TraderLab community. Download the 60 PDFs of structured trades. You take one, reverse engineer it, make it your pet, and then know it inside out, and then build metrics so you know you actually can execute with a statistical edge. That's the first piece. And then, of course, participate in the community and develop a business plan for the business of trading if that's your goal to be in the business. Thanks again for visiting TraderLab. Appreciate you stopping by today. This stream's available exclusively the Bookmap Discord TraderLab participants, and of course, there's no cost. And that's for review, circles, arrows, screenshots, build out your library. Notice our market pulse is at an extreme. Notice where our sellers were trapped down here. Notice we're at an outside edge. let's see if we can get back and reclaim the mean. Not a trade recommendations. Thanks, guys. Look forward to seeing you soon. Remember, FOMC, if it's always best, in my opinion, subject to your risk management process and the size of your account, that you become a tourist. The action will happen after FOMC, and it should kick a lot of volatility. And I suspect this range that we're trading will not stay intact. Take care, guys, and thanks again for visiting today.